Good morning everyone, I'm Ken, financial analyst from Regain Capital, and welcome to our morning market briefing on the 9th of November, Monday. So as usual in our market briefing, we will cover three parts, namely the fundamentals, the news release and the technical analysis. So without further ado, let's start off with the fundamentals. When we take a look at last Friday's market movement, we can see gold extending gains by a little bit by 0.05%. The euro climbed against the dollar as much as 0.4%. The dollar index fell by 0.43%, and oil also falling by 2.91%. So let's get into further details with the headlines of the day. First off, let's talk about the presidential election, where Joe Biden has officially crossed the 270 electoral votes required to be elected as the next US president on Saturday. However, President Trump had yet to concede, while his administration brought up legal actions against the election outcome. Now, this has threatened a peaceful transition of power, which will most likely have impact onto the market. Now, on Friday, investors had already priced in a Biden victory as they dive into riskier assets while trading off their dollar investment for gold as an inflation and risk hedging. So instruments involved here would be dollar index itself and also the gold. Moving on, let's discuss on the major currency pairing against the dollar, where we can see most of the major currency is now setting a bullish course against the dollar. Now, after Joe Biden won the final state required to be elected as the next president, investors quickly sold off the dollar while entering into riskier assets such as the euro and the pound, which allowed both major currency to climb to a 2-month high against the dollar on Monday. Now, furthermore, the Asian pairs also gained against the dollar in expectations that Biden will use a more friendly approach in the trading terms with China. So instruments involved here would be most of the major currency pairing against the dollar. Moving on, let's take a look at the news release we have for today. So please take note, time stated here at GMT plus 8. So today we only have one major economic data, which is the central bank speech from the Bank of England at 6:35 PM. So from the speech, we would see how the central bank would discuss in terms of its policy actions, and also a little bit on the interest rate, where previously the Bank of England during its policy meeting did not eliminate the possibility of a negative interest rate, but instead saying that they are planning currently on the actions that should be taken and the consequences that will be involved if they were to cut to negative interest rate. So investors can focus on the central bank speech to see, to gauge on how the actions from the central bank would actually affect the pound in times of the US presidential election results. So moving on, let's discuss on the technical analysis. So here's an overview of instruments to be covered. First off, Euro JPY H4 chart showing a downtrend. Australian dollar against the New Zealand dollar in its H4 chart still in the downtrend. For the GBP US dollar H4 chart in an uptrend, and for gold in the H4 chart also in a strong uptrend. So let's get into further details with the chart analysis, starting with the Euro JPY. So for the pair, we will construct the Fibonacci from the previous high over towards the low over here, and we can see that the pair is currently testing towards the 23.6 Fibonacci near 123.00. So the breakout above the 23.6 Fibonacci, as usual, will provide us a confirmation whether or not the pair would be changing its trend from a bearish trend to now a bullish trend. So overall, cautious investors are advised to wait for the breakout above the 23.6 Fibonacci before entering into long positions for the pair, with a stop loss placed 40 pips from the level at 122.6, and a take profit can be targeted all the way towards the 38.2 Fibonacci at 123.7. Whereas for aggressive investors, if the pair fails to break above the 23.6 Fibonacci, aggressive investors can consider short positions. Stop loss should be placed above the 23.6 at 123.3, and a take profit can be targeted all the way towards the support zone over here at 122.2. Moving on, for the pair of Australian dollar against the New Zealand dollar, constructing the Fibonacci from the high point over here towards the low level, we can see that the pair has faced rejection last week from the 50-point Fibonacci near 1.0760, while also breaking back below the 38.2 Fibonacci at 1.0720. MACD overall is showing a bearish momentum, thus signaling that the pair might continue its trading within a downward trend. So aggressive investors can consider entering into short positions at the current level 1.0700. Stop loss should be placed above the 38.2 Fibonacci at 1.0730, and the take profit first targeted all the way towards 23.6 at 1.0670, and a further targeted profit can be set in between the 0.0 Fibonacci and the 23.6 Fibonacci, somewhere around 1.0640. Whereas for cautious investors, you are advised to wait for further bearish confirmation, which is the breakout below the 23.6 Fibonacci, before considering short positions for the pair. Next, for the GBP US dollar in the H4 chart, also constructing the Fibonacci from the previous high, reach over here towards the lowest point, we can obtain levels where the pair is currently testing the 61.8 Fibonacci near 1.3180. So previously we have covered for the pair where a breakout above would suggest the pair to continue its top momentum, upward momentum towards the next support level at 1.3260. So overall, cautious investors are advised to wait for the closing of the H4 candle to see whether or not the pair is able to close above the 61.8 Fibonacci for a breakout confirmation, or would it close below and still testing towards the 61.8. So cautious investors are advised to wait for the next H4 candle to see whether or not the pair is able to close above, whereby after the closing of the candle above the 61.8 will suggest a long positions. Stop loss should be placed 40 pips from the breakout point at 1.3130, and a take profit can be set targeted all the way towards the next resistance zone near 1.3260. However, if the pair fails to close above the 61.8 Fibonacci, it suggests that the pair is still waiting for confirmation and might not have enough bullish momentum to break above and continue in a long-term uptrend. By then, if the pair closes below, aggressive investors can consider short positions. Stop loss should be placed 30 pips from the 61.8 at 1.3210, and a take profit targeted all the way back towards the 50.0 Fibonacci, or just slightly above the 20 moving average at 1.3100. Lastly, for gold in the H4 chart. Now for the gold, we need to construct the Fibonacci from the highest point reach in April over here all the way towards the lowest point over here near 1850, and we can see that the gold is currently testing near towards the 50.0 Fibonacci at 1960. MACD overall is still in the bullish momentum, however we can see weakening bullish momentum now heading towards a bearish crossover. So overall we will still wait for a further confirmation whether or not gold is able to break above the 1960 resistance to continue its upward trend on course back towards the highest level reach in August over here at 2075. So after the breakout, cautious investors are advised to consider long positions. Stop loss should be placed 100 pips from the level at 1950, and the take profit can be targeted all the way towards the 61.8 Fibonacci near 1990, or to be even lower at 1980. However, if the gold fails to break above the 50.0 Fibonacci, it might face some technical correction, retracing back towards the 38.2 Fibonacci direction, and then aggressive investors can consider entering into short positions. Stop loss should be placed above the 50.0 Fibonacci at 1965 to be safe, and a take profit all the way towards the 38.2 Fibonacci near 1940. So that is all for our market briefing. Please remember to follow us on our social media such as Facebook, Telegram, Twitter, as well as Instagram, and feel free to drop by our website at www.regaincapital.com to get updated on all the latest market news as well as education posts for our clients. So thank you all for listening. We'll see you next time on our market briefing, and happy trading to all.